Hello and welcome to the Friday wrap-up brought to you by David Gokhshtein and the Gokhshtein News Network. I'm your host, Landy, and today is January 16th, 2026, and we're going to look at Bitcoin to start today. We're going to look at the daily as we did hit some of our upside targets. So we saw that on Monday, we were sitting at about a high of 92.4. We saw the close come in at that 91, 91.2 region. And I had mentioned that I needed to see Bitcoin trade up to, and was likely going to see this trade up to if it set a low, especially start closing anywhere above that $92,000 region, essentially taking it $2,000 at a time, with that weekly at 93.5 being a big area of interest. But essentially 92 to 94, 94 to 96, and then 96 to 98, and then there's the big weekly at 98 to 101. Well, we got each move step by step. We saw that the very next candle, that Tuesday candle, did spike up to 96,250. You'll see in just a moment that's where the point of control is. Or just shy of the point of control. It's like 96,300, but essentially 96K. And then above 96, we looked at 98. The high came in at 97,963. That might as well be $98,000. So we got the moves that we were looking for to the upside. We are seeing a bit of a cool off from those highs. So, step by step, I said take it $2,000 at a time. Essentially, that's what we've seen so far. Bitcoin is still in a bullish position as long as it holds the last higher low, which is that consolidation higher low structure with, essentially $89,000 on the swings, and on the closes here around that 90,000 to 90,250, depending on your chart. As long as we see closes above there, this is an uptrend on the daily, higher lows, higher highs, right? So the next big area overhead, of course, is the weekly at 98 to 101. I'm going to show you that in just a moment, but I want to talk about something here because I saw on the timeline, big deal being made about the ETF inflows for the 13th and 14th. It was like 750 million and then almost 800 million or something like that. And everybody's like, see, institutions run this game. And then, there was still inflows as of the candle of the 15th here, but it was red. And then people were a little puzzled. Like, why? The inflow has cooled down, but why did the candle turn red? Well, it's because you're not paying attention to the entire market. It's not just the institutions and the spot ETFs. They are a very large and influential component to the market. And I'd argue they are one of the main components to the market right now. But they don't sit in the driver's seat. They share or co-pilot, I should say, price action with the centralized exchanges who hold a lot of supply, and there's a lot of money being traded. I've mentioned this before. There's about $40 billion in open interest on the spot ETF side, right, between all of the different vectors for options plays, and that includes the other types of plays like the leverage plays outside of the options ecosystem. So that is accounted for. You've got about $8 to $9 billion in open interest on CME. And then over on the crypto native exchanges where there's far more supply, we have about $43 billion in leverage. So about 40 to 48, depending on if you're going to count CME or not, in open interest in the equities traditional market side. And then you've got about 43 billion in the on the crypto native exchanges. On one side, you have expiries, right? You got weekly expiries every Friday, right? And then on the other side, on the crypto native exchanges, you have the entire open interest profile is dominated by perpetual futures, right? So there is no, there's perpetual contracts and futures contracts. Futures do roll, but they're typically every quarter or so, or every month, depending on your exchange. And there's different products on different exchanges, but it's primarily dominated by perpetuals, which means that you don't have to close them. You're just subject to the funding fee until it eats away at your position, which is typically long pay short, predominantly even in downtrends, even in the deepest of bear markets. So typically longs are paying those funding fees in about 70 to 75% of the time. So something that I wanted to bring up is obviously there's a big component, and many people have challenged me. I've obviously had people say like, oh, the institutions are the only thing that matter. Yes, there's a lot of OGs. They make up about more than half of the long-term holder supply. But when you look at the cohorts, the biggest cohort is still crypto native exchanges where there's a lot of perpetuals traded, large amount of open interest there. And then you have, select cohorts that are the most active, right? Like whales still, they're not as quite as active, but they get active at certain periods of time. And then you have the most active cohorts being short-term holders. And then, of course, that's what's typically being traded on those exchanges. And then you have miners with their 1.8 million supply that people have told me miners don't matter, but they certainly do, especially when you see something like this. And this is where I want to illustrate a point. This is the aggregate inflows for the entirety of the spot ETF market. So on the 13th, we had 750 million rather in inflows, and then we saw 843,000 on the 14th, and then another 100 million on the 15th. And something that I want to show you is if we go back to the chart, so we've got the 13th, yeah, big numbers, right? And then even more big numbers. So we saw the 750 and then basically the 850 million, but you got smaller candles. Why? Because we were heading into resistance at each point, right? So you're getting the rest of the market, selling into price moving up, obviously profit taking from positions, all kinds of different things happening. And then you get the added pressure of things like liquidations because people are kind of silly and they take longs on high leverage. Even when price is going up, you can get liquidated on some of the swings and lower term timeframes and all that kind of stuff. So I wanted to kind of point that out real quick. And so, on the way up, especially even though there was on the 15th, $100 million of inflows from the institutional side, part of the market is moving against that $100 million in inflows, right? Well, what part of the market is that? And we can go over here and we can see on the daily for the 15th, we saw liquidations of 26 million. So there's a quarter of that, in sell side pressure just from liquidations alone. That's not counting all the profit taking, whales stepping in, long-term holders maybe selling, short-term holders maybe selling on the other side of the move up, traders taking profit, that kind of stuff. And then you also have minor outflows. And on that day, on the 15th in particular, we saw 9,000 Bitcoin flow to exchanges. So this is minor wallets to exchanges. And that is $955 million, right? And prior to that, we had, about 700 or 7,000, 7,750, 7,000 even or so, 7,700 or so, right? So, some quick napkin math here in flows while price was being pushed up. We're looking at, anywhere from 700 million to 955 million, right? So we had essentially, about $2.3 billion inflows to exchanges from miners alone, right? And that's not, there's net inflows and outflows, and net flow is pretty important. Let's just say that it's a tenth of that was sold. That you're looking at sell side pressure just on the 15th alone, where you did have nice inflows. Coming into resistance, you got people taking profit. You've got liquidations on another market outside of those traditional market, flows of about, 25 million. And let's just take a tenth of that on that day and say that 955 million, let's say there's inflows back. So we get a net flow of like 55 million. Just be stupidly conservative and say that that was all that was sold out of all that was transferred. And now you're eating more than 75% of the inflows of those ETFs. And then all it takes is, some more outflows and selling on the other side of that from the spot side. And you can imagine that there's profit taking in those areas that are going to be more. Obviously, you can tell by the red candle that there was profit taking on the 15th that equaled more than those $100 million of inflows on the 15th, thus resulting in a red candle. So my point behind a lot of this is that if you don't have a view of the market in its totality and understanding that it's kind of a tale of two worlds, and right now you have these equally sized derivative markets built on top of these like the spot side, the spots ETF side with the options markets, and then of course you add in CME, and then you have the crypto native exchanges with all the open interest over there as well. They're about equal. And you got to remember the underlying asset that's being leveraged against in the spot side for the ETFs is right around 1.3 million Bitcoin. And there's way more Bitcoin on exchanges for crypto native exchanges. 2.4 to 2.7 is pretty average, depending on how you're aggregating those exchanges. And that's monitoring not like Merkle Tree or anything like that to see reserves and stuff like that. That is monitoring and aggregating the total amount that is seen on the inflow and outflow, so we can kind of get a good number of how much they're holding on those deposit wallets. So it's a big world out there, and U.S. markets and the U.S. equities markets are not the only players in this game. Like, there's other countries. There's actually other people in other countries who trade Bitcoin, and so my point being is that if you don't have a total view of the market, making declarative statements like, yeah, like it's suppression, even though there was inflows, it's obviously the paper against Bitcoin that is holding it down. I mentioned this before. I've shown the statistics. There's only about 15 to 17% leverage on a given basis for the totality of just the most active cohorts, which is about 6.5 to 6.7 million Bitcoin, which is the most actively traded Bitcoin out of the total circulating supply. A lot of it is just kind of sitting, but on a daily basis, the most active cohorts are going to be your crypto native exchanges, followed by your miners, which are very active every single day in sending to and from exchanges. And then you have your spot ETFs, you have your short-term holder cohorts, and a few others, right? So like out of those, the leverage just on that smaller portion that is the most active supply is only like 15%. Making silly claims like it's just as controlled as all the paper markets for commodities is just silly. You're looking at just silver alone being over 35,000% leverage versus underlying. So I want to hammer that point home, because a lot of people look at that and they're like, see, it's suppression. They come up with these narratives, and it's like, no, this is a logical place where people are taking profit normally. And there's a lot of different players in this game. I'm not here to say like miners are the most important, but a lot of people like to discount that there's any other market other than the institutional players that are here. It's all CME and the institutions. They've taken everything over. They're controlling price action. It's like as if no other cohorts exist, no other markets except the U.S. markets exist. And that is just silly. So that being said, I'm going to keep hammering this point home because I think that it's important that if you are in this market, you understand what is happening and why. And you understand where to go to look to find that data. If you want to go and you want to look this stuff up yourself, you can go and look at open interest, aggregate open interest, and stuff like that. This is Coinalyze, right? It's just open interest. There's plenty of other places you can go and look this up. You can see that right now on Bitcoin, open interest is sitting at 29 this is reading around $30 billion in open interest for these aggregate exchanges. There's far more than that when you consider all of the other cohorts. This is just a much better charting solution. But there's other ones that are going to show you the totality of open interest, but they just don't have as nice charts, in my opinion. You can go to Crypto Quant here, and you can get miner flows, and you can get open interest, and you can watch, what's going on in the network. You can see what's going on in the ETF markets, all that kind of stuff. It's free, by the way. You don't need to pay. You're just going to get limited data if you don't pay. I'm not really logged in here under my normal account. And then if you want to go look at ETF flows, this is sosovalue.com, and you can look at ETF flows, right? understanding like where to go to look at this data. If you're unsure of what's happening in the markets, you want to have a reason why, not just look at the narrative and read the headlines and be like, that's the boogeyman over there. Well, inform yourself on what's actually happening in these markets, understand where these flows are going and where they're coming from, and you can get a really good gauge for the why. You don't necessarily need to know that to trade the market, though, as this literally played. You didn't need to know any of that. All you had to do is look at some of the analysis, and if you're doing your own, it's very clear where the areas of support and resistance are. So let's go ahead and get into that real quick here, and we're going to wrap this up very, very shortly here and very quickly. Bitcoin didn't quite hit that weekly, but it did hit just shy of $98,000. That's where I was talking about. You got your point of control right to that wick after getting above, of course, in lower term timeframes this weekly at 93.5. If we do see this retrace any further down below 93.5, we can start looking at that basis band, which is essentially $92,000. So if we drop, 94 to 93.5 here by the weekly, which is essentially, you got $1,000 range between the upper first here, 94.5 to 94, and the weekly at 93. Then we start looking down towards that basis at 92. If that is lost, beware, beware, beware. $90,000 or so by the higher low structure here. And then 89 is kind of the inflection point. That's where this starts to break down on a swing basis. Anywhere below there on closes, put it below the actual lower first standard deviation, and starting to look back down towards the bottom side of the weekly here at $86,000 by that lower second. And then of course you can see bracketing the bottom side there, if it does lose that, is that $83.5 to $84,000. So essentially 83.5 to 84 to 86 if we see closes, specifically in this case, that break the uptrending structure here below 89. Doesn't mean that it's just going to go there directly, although it could. It could, even if it breaks structure, try to bounce and then make its way down to some of those areas if that were to happen. To the upside here, if we do see this holding in higher low structure here, take a look at this weekly overhead. If we see 98 traded above, look right to that 101 at the top side of this important weekly area. Obviously, we got a lot of dailies just above there. Swings above there, you can start looking around 102.5, which is a weekly level, to 103.5, 103.650, fair game. Anywhere above there, we start looking up towards 104, 105 region before hitting this major weekly level at 107 to 108. That is a big inflection point within this wider weekly zone between 102.5 and 112. We need to see that recovered for the bulls to even have a shot at potential new highs. That doesn't mean it's going to go on a run, by the way, but potential new highs, that's where things do start to change a little bit. You get a lot of shorts covering into that area, probably getting pushed out on the top side above 112. We would need to see closes, not just on dailies, but weeklies above this wider zone at 112. And yes, there's still plenty of resistance overhead, but it does increase the probability that Bitcoin could swing for its all-time high and maybe even higher. That does not mean that it's necessarily destined to be brand new all-time highs. It's going to go on the next leg and like all that. We'd have to evaluate that from there, because even if it did that and it didn't reject some of these areas overhead, which, by the way, this is all hypothetical as it stands right now, because we need to see these areas reclaimed by the bulls and held and closed above on weeklies. But, if it puts in a lower high in the weekly, it's already in low structure. That's pretty bearish. But in this case, if it starts to regain any of those areas, that would increase the probability of new all-time highs. And then we could evaluate later if it does start to make new all-time highs, if it were to actually start to get set up for a leg up. And in this case, I'm going to tell you right now, it is not set up for that on the weekly, so that would take time. And there's no rush, even if it was to start actually legging up that way. And why do I say that? Because the weekly is set up against price action right now. So one of the big things that you'll see, weekly basis band now entering this weekly higher low structure right here, just above 101 or right at 101 essentially, to in between there and 102.5, which is this weekly close open right there. And then of course we have the 104 to 105 area over here. So just be aware of that. And that's even before getting to 107 to 108. And then there's a weekly close open right at 109 before even getting to 112. So understand, one step at a time. We need to see this area right here reclaimed. We're also below the basis. This is called mean reversion. So this is still a bearish setup. But you could see that if Bitcoin started to reclaim some of these important areas, especially above that 107 to 108, and reclaiming the higher low that was holding up these highs here before it failed, then it could very easily run back to the highs. There's no reason why it couldn't even swing to make newer all-time highs, but it's not set up in any kind of a compression unless it would come back down and then set up for a compression, hold support, and then get going to the upside. But right now, this is a bearish setup. This is a trend break to come up and retest prior areas of support. So understand that if this puts in a lower high, that's not good. That is very likely going to lead to lower price action and possibly even set up for a trend, a full-on, trend break to trend reversal and then continuation. So keep all of that in mind. It's playing out before our eyes. Take it one step at a time. Have fun to the upside here. Make sure that you're paying yourself if you're in the long side of those positions. Weekly setup for this. We've already gotten confirmation. We've gotten the weekly low set. It's going to be confirmed on any close above $95,000. You want to see this weekly close above $95,000 if you're bullish. Then we can start entertaining RSI to the midline, which is right around $100,000, and then potentially in the future up to the bullish control zone, or the edge of the bullish control zone, which right now is at 117. This is actually going to come down to probably around the 116 region on this Sunday's closure. And that is right here. That's the bottom side of this structure right here, where this lower high came in, where this wick low is, and this lower high in the weekly came in right at around $116,000. That's likely where that's going to end up. We'll see how Sunday closes, and obviously Monday we'll have a lot to talk about, depending on if we can see closes above $95,000. We'll see a lot of conditions start to present themselves for potential upside and or invalidation of any further upside moves. So let's go ahead and take a look at a few more things. We have commodities. Let's look at the weekly on silver. We did hit 93.69. Nice. Anywhere above 88. We took out 88, and then, like I said, mid to low 90s is pretty much the next big area, around 95. You can see that the upper third's around 98. So 98 to $100, and even above to like 103 is fair game to the upside from a weekly perspective, almost 104, 105 region. So essentially 98 to 105 is kind of another big area to the upside to pay attention to on silver if it does continue the move. This thing can retrace all the way back to $70 as long as it doesn't break below it. It's fine. And I would say realistically, as long as it's above 80, it's continuation. That would be accurate, because that is the low of this current weekly candle that just closed. And you see the daily is possibly setting up for a top here. If we get any closes below $86.45 here, this swing low, that would put it somewhere below the upper first here on the bands, headed towards, the low 80s, at 83.75 here to somewhere around $80. And as long as it's trading closing candles on the daily above $80, upside is the name of the game. If it does lose that, then we start looking to, the last higher low on the daily, which is right around $77, with the swing low coming in at 73.86 here. If that area is lost, that's a trend break. We're probably already seeing 70, maybe even lower, or that will be the name of the game as the next move to the downside. But for now, it's sideways and up is the name of the game above $80 or so. And it can safely come down and test, no problem. Now, obviously, it's already closed, so it's more about when it opens back up. Gold, same thing, coming back to our 45.33, our 2414, and that was the close open there as well. So For gold, it is a little bit of a different setup. As long as it's trading and closing above, the 4,500 to 4,533 here, where the close open came in on the daily, upside to, 47 is in play, 46.75, 47 is actually the play. And if it really got rolling to the upside, we're looking somewhere around, 47.50 to almost 48 by the upper third when this opens back up. So that's actually still all good. And as long as it's closing above the basis band, especially, but more importantly, this higher low close at 44.56 with the swing low coming in at 4,400, it's sideways and up. Even if it just grinds around, the structure here isn't even, it hasn't even locked in the high yet on a closing basis. So still got juice to the upside. It can keep grinding. You can see, 4,700 is going to be the name of the game by the upper second when this opens on Monday. Right now, this is still reflecting the weekly candle that just closed. So understand that eventually will start to open up next week, the $5,000 at the extremes for the weekly. And of course, extremes can be hit. It might just take a while for it to get hit, but 5K is going to be on the board when we open next week. If we start getting above 4,700, 4,800, that is the next major higher term time frame play from a weekly standpoint. And again, the big thing for the weekly here is just holding this weekly close open structure right here that resulted in another higher low. It's 42.60 on the swing, and the close there is at 43.31. So, we'll get plenty of warning on the dailies before that weekly, I suspect, would even be in danger. So the name of the game is sideways and up until proven otherwise. Now let's go to traditional markets. We did not see continuation, but we did see the highs hit. So, we did get the highs hit. We did not get any continuation to higher highs. In the Friday candle session, we essentially hit the highs. I mean, it's close enough with the high coming in at 49,616. Anywhere above the 49,633, we can start looking up to 49.8, 49.9 as the upper second is going to begin to move up. Higher low structure above 49,000, 49.1. From the swing to the close open there. And as long as it's trading above there, sideways and up is the name of the game. If it does break down below there, then we're looking back to 48.5, 48.4 down here. And then if it does start to lose that, the lower first can play catch them down there by, 48.3. But if realistically, it's all about this next structure and 48, 48.250 to 48.3. Right around that lower first is going to be a bias breaker if it does get there. Likely headed towards, the upper 47s, 47.8 to 48. And that would be what I'd be looking for to the downside. But again, it would be closes, especially anywhere above the 49.1 to 49,000 is fine. Sideways and up is really where it's going to be headed. NASDAQ, ugly consolidation, but it's very easy to identify what's going to be, the conditions that we need to watch for. And to the downside, any loss of 25 to 25.2 here would be, expansion to the downside, right? So mid 24s, 24 and a half, probably the name of the game there on any closes below the lower second. Above the highs here, if we do start to see it closing above 25.9, then we can start looking up to 26 to that 26.2 region and possibly get expansion up to 26.5, 26.6 up top. Now that's going to be borne upon conditions being met, to the upside on the daily as it relates to the weekly. That's where you'd start seeing moves to the upper second on the weekly and stuff like that. But right now, it's just a consolidation for NASDAQ and just set the conditions on the daily relative to the weekly for what you're looking for. SPY SPY did, spike basically the close open, got close, didn't quite get there on the high at 695. Continuation is going to be to 700 or 7,000, depending on if you're looking at SPY or SPX. And anywhere above there, I'm looking 702 to 705. To the downside, this needs to hold on a close, which it did spike into 690, and then 686, 685 region. Anywhere below there, we're likely running the lower 680 to 683s. If it does lose 680 down here by the lower second, so between the lower first and lower second, 683 to 680. If it starts to get below there, then it's expansion to the next area, 675, 670, in that order. And like I said, above the highs at, we're looking at 696. We kind of already hit our targets at 695, spike to 696, is above there, 700, 705. I'm going to be talking to you on Monday anyway, so it's really all about that Monday session. This is already closed on the weekly, so not really too much else to really point out here. You can see 700 is the upper second. That's going to move up to like 703 to 705 in the next close open. So it'll crawl its way up there, and then anywhere above 673, 675 is the basis band. So if it starts to lose that, things are likely headed down to below 670, we're looking 660 to 665. But as it stands right now, looks fine until we see it drop around 685. That realistically, that's when it's going to start testing some further downside and, possibly start getting maybe even some expansion below that 680. So other than that, it'd be, just a grind sideways and then potentially to the upside. Any kind of major events next week? If we look at Forex Factory, there's not too much to be concerned with here next week outside of what was there that I wanted to point out here? GDP. So we'll get final GDP numbers. Of course, we're going to get core PCE, but we're going to get final GDP. We do have some BOJ policy stuff that I would be aware of next Thursday, but I'll remind you of this next week. Like coming into Monday, there's not too much out of Canada, outside of Canada, I should say. And that's kind of it for a little while. All next week, what you're going to be hearing about is the end of the month, the last week of the month, when it comes to the actual rate decision, right? So the FOMC meeting and rate decision that's going to be happening on Wednesday, the 28th. So Fed funds rate, FOMC statement, that's going to be a big, next week's probably going to be the news run up to that. So just be aware of that. Other than that, I've said this before, but be aware coming into the end of the month of possible government shutdown talk as well, including FOMC stuff that can lead to volatility in markets and a little bit of unsteadiness. Typically if they do shut down, like every time that we've seen a shutdown in recent history, markets have moved up. And then when the government opens back up is when the markets dump off, right? So I would just keep a close eye on that. From the news side, your charts are going to tell you kind of what the market thinks anyway. So it's not the news having an effect, is that the market is going to front run what they believe is going to be the scenario, the scenario playing out in the news based environment. So that's it for today. I hope you all had a wonderful week. I hope you continue to have a wonderful weekend. Please like and share this out there. I really do appreciate it. And you have a wonderful weekend, wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.